Okay, guys, as usual, a very warm welcome from me and the FP Markets team. Thank you all for taking the time out of your day to be with us. I see some regular faces here, which is great. So for those of you who are new, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. Just a little bit of background about myself. I've been literally obsessed with charts and trading for more than a decade now, with a particular focus on price action and most importantly the psychology behind candlestick action. Although not necessary to trade successfully, I also completed CMT levels 1 and 2 and received the CFTe qualification in 2020. So guys, let me just quickly run a sound and visual check to know I'm coming across loud and clear. Excuse me. Would you all be so kind as to let me know in the chat box that you hear me and the slide is visible? Excellent. Thanks, guys. Okay, brilliant. Right, as always, I just need to run over the disclaimer on screen. Just give me a second, I see some more. All good. Thanks, guys. Thank you. Okay. Right, sorry about that. So right, as always, I just need to run over, as I said, the disclaimer on screen before I dive into the content. So look, it essentially says what we go over in this presentation should not be viewed as any form of investment advice. And guys, you know, as I say in all of my webinars I take part in, please always do your own due diligence in anything trading or investing. So look, the disclaimer: the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. Okay, moving swiftly on. So first on the scales is an intro to timeframes. I included this section here as some newer traders may not fully understand the meaning of what a time frame is in the trading domain. Next up, I will discuss whether there's a best time frame to focus on. Here I'll be touching on the most common trading styles, with the majority of focus being on the higher time frames. But you know, the best time frame is dependent on a number of factors. Therefore, this may be interesting for newer traders just getting their feet wet, so to speak. We'll then switch things over to higher time frame direction and its use on lower time frames. While some traders focus solely on higher time frames to trade, which is absolutely fine. I actually know a couple of traders who do very nicely trading just the bigger picture. Higher time frames also have use on the lower time frames, which is something I try to show in the weekly and daily analysis, which I will go through at the end of the webinar. And finally, we'll have a Q&A. This is a chance to ask me anything about the content you need further explanations on. I encourage newer traders to really step forward at this point. And also, as in each webinar, I like to try and get through each question. But if time runs out, please feel free to email me and the research team at market analyst at fpmarkets.com, and we'll get back to you as soon as possible. Additionally, feel free to send across any ideas, future presentations, and the team will look at putting something together. Please also remember a recording of the webinar will be available FP Markets make this available through a number of avenues, including the FP Markets website and FPM's YouTube channel. I see a comment about the time being incorrect. Yeah, Mike, I'm not sure what's happened there. I think there might have been some confusion with the timing, GMT, BST, I'm not sure. Mike, can you still hear me? I see you saying no volume, and then you're saying all good. So I assume that's okay now. Yeah, all right, excellent. Okay, moving swiftly on. So look, an intro to timeframes. Okay, so look, for those of you brand new to the world of trading, a time frame simply refers to the to the period a candle or bar opens and closes. On MT4, there are 9 time frames stationed on the upper panel. Here we have the option of selecting time frames as high as the monthly time frame, right down to the minute time frame. Now, of course, the minute time frame will display a bar or candle each and every minute. So this will be a relatively fast-moving chart, while a monthly chart only paints a new candle each month. So this would be considered a very, very slow time frame. And you know, look, an hourly chart would pencil in a candle each and every hour. So on the H1 chart, there would obviously be 24 candles to one day. While on the MT5 platform, we have more than 20 time frames. As you can see, the additional time frames here allows traders more flexibility in their time frame selection. We have the option. Look here, we have the option of 12-hour candles, 3-hour candles, and you know, even 3-minute candles. So there's much more selection with the MT5 terminal. Personally, I do prefer the MT4 terminal, as that's something I've grown to be accustomed to. But MT5 is clearly offers a lot more in terms of time frames. Look, guys, really there is not much more I can say on the subject of time frames at this point as an introduction. So if there's any questions, please fire away right now, and I'll try and address them regarding the time frames. Okay, no questions. I assume everyone's good with what I said. Brilliant. Okay, let's move on. So what is your trading style? So ultimately, 4 main styles of trading exist: scalping, day trading, swing trading, and position trading. The separating point between the 4 styles is time, or length of time trades are held. Look, scalping trades are only held for a few seconds, or generally at most a few minutes. This is not for the faint of heart, guys. It's really not. I'm not sure how many scalpers we have with us this morning, but I'm sure they can attest to that. Day trades or day trading are held for anywhere from a few minutes to you know, a couple of hours. For swing trading, these are usually held. This can be held for an entire day or a handful of days. It depends on the position. And position trades are held from anywhere from a few days to, well, at the extreme, a few years. And this depends on what kind of trend you find and things like that. So a scalper will typically monitor the M5 and M1 time frames, so the really, really lower time frames. Day traders tend to focus on M15 time frame, so the 15-minute time frame to the hourly time frame. Swing trading generally, you know, focuses on the H1 and H4 time frames, and sometimes even the daily scale. So while position trading, this is more, you know, in my experience, this is more of an investment approach, and this type of method places emphasis on the daily time frames, weekly time frames, and monthly time frames. Now, as far as I've seen over the years, the appeal towards position trading continues to grow. So, as its name implies, the position trader. Position trading involves taking a position in a currency pair, assuming we're talking about FX here. The ultimate goal, of course, is to jump on the back of a major trend, which focuses on the bigger picture. Position traders do not tend to focus on market blips, meaning minor retracements and pullbacks, as they focus just on the bigger picture. When I say the bigger picture, guys, I'm talking about the monthly time frame, the weekly time frame, and the daily time frame as well. As I'm sure you guys can imagine, the appeal to position trading is for those who work full-time jobs, right? Actually, I'm not sure if you guys or any of you guys are aware, but having a full-time income, although we'd all love to be full-time day traders, I understand that, but having a full-time income can help lessen the psychological impact of trading, as many full-time traders obviously have a need to make money, right? So look, position trading is a cool option for those who dread the thought of being stuck in front of a screen all day, waiting for trades to materialize. Just give me 1 second, guys. Okay. So look, position trading is different for, I think, just to confirm, guys, there has been a mix-up with the time. Apologies for this. I think it's with the BST and the GMT. So as I said, though, guys, there will be a recording for anyone that wants to rewatch this webinar. And as I said, any questions, please do fire them over to FP Mark. Got the email now, marketanalyst@fpmarkets.com. So look, position traders, excuse me, guys, 1 second. Position traders often make a small number of trades, over the course of a year, generally only keeping to the critical moves rather than the a chop and change approach, which can obviously lead to less trading stress, right? And hopefully less of an emotional connection. Swing traders make more trades, of course, as they focus on the lower time frames compared to position trading. Whereas day traders tend to make many more trades, and as they're generally in the market each and every day. Guys, can I just ask real quick, how many of us here adopt a position trading style? Is there anyone here, or are we all scalp? Yeah, there's a few scalpers here. Okay. So Mike's saying, I like to scalp. Yeah, there's quite a few scalpers here. Wow. Okay, excellent. So Mike said, there's a comment from Mike saying, I like to scalp into my entries, but to swing it or position, stack and pack. I like that, Mike. Very good. And let it run and close it at the end of the year. That's an excellent point, actually. Scalp into a position, so your risk is small, right? And then obviously the gains are huge compared to your risk to reward. Brilliant, Mike. Thank you. Excellent. So look, position trading. It's not all sunshine and roses, of course. Like any trading style, we have downsides. Just give me a second, guys. I think I'm having a problem with my slides this morning. Just 1 second. Sorry about this. There we go. So a clear downside is exposure. This is for position trading. So look, while it's true that holding an open position in the market for a longer period does increase the chances of catching a trend, because you're in the market obviously for a longer period, being exposed to the market itself is inherently risky. Remaining active in the market for long periods of time increases the chances of experiencing heightened degrees of volatility and risk. Another point worth highlighting is time. Holding a position long term requires a trader or investor to allocate capital for a substantial period of time. The initial capital outlay, the money required to facilitate the trade. This includes margin requirements as well, which we have to take into account, is effectively off the table until the position is closed out. So this can lead to what's known as, let me just get my opportunity cost, where the trader or investor is unable to pursue other opportunities because sufficient funds are not available. So look, guys, what is the best position, best time frame to trade or to focus on? So look, excuse me, guys. While I would love to be able to direct you to a specific time frame and say that this time frame is the better option, it is simply just not possible, guys. It really is not. It ultimately depends on the individual's traders, the trader's circumstances, right? If anyone here does know of a universal time frame suitable for us all, please let me know in the chat box right now, because I certainly do not know of any trader that can pinpoint a universal time frame for us all. We're all different, right? We all have different lifestyles and commitments, and this affects which trading style you work with. As an example, having full-time commitments usually places the trader or investor in the swing trading or position trading category, as the time at the screen is, it's obviously limited. Though if you have spare time, another example is if you have spare time during the day, say you work part-time or are retired, then day trading or scalping could be options. Guys, and for any scalpers here, how do you manage to scalp? Do you have full-time jobs as well? I'm just curious how you manage to merge this with any jobs and things, or are you full-time scalpers? That'd be interesting to know. So look, I wish I could give provide a more detailed, defined answer regarding which time frame is the best. But look, which time frame and ultimately which trading style you choose to follow depends on your own personal settings. There's no one correct. For me, there's no one correct answer applicable to everyone, as far as I know. Okay, we have a few comments here. So Say says he or she, excuse me, works 2 days, 2 nights, 4 days off, lots of time to learn. Excellent. Okay, brilliant. As I said, guys, I wish I could provide a more defined answer as to which time frame to focus on, but I think it's just literally impossible unless I know all of your personal commitments and things like that. But look, guys, the common goal among traders, and look, feel free to correct me if I'm wrong, is to control risk. Well, I would hope it's to control risk and make money. However, trading styles and experience levels will, of course, differ. Hence, so will the trading styles. Look, so to help newer traders here, I thought it may be worth running over other trading styles. So as we have largely focused on position trading so far. Yes, guys, I think there was a mix-up at the time. I do apologise for that. I think it's wrong on our side, guys. So apologies. I'll stay a little bit longer over time to answer any questions or for anyone that's come in, and I'll quickly go over the charts with them, so we can all hopefully leave with something. Look, so scalpers. ultimately target minor fluctuations in the market, entering and exiting trades multiple times per day to build profits. Scalping, in my experience, is best suited for those who can devote time to the market, stay focused, and act swiftly. It's usually said that impatient people make good scalpers, as they tend to exit a trade quickly after it becomes profitable. Key attributes of a scalper are those who can handle stress and act under pressure. But as some of the attendees here have said, scalping into a position and then following a swing trading or position trading style method is excellent. In fact, I know a lot of traders that do that. They go in with minimal risk, and then they focus on the swing trading methodology if the trade moves in favour. This can really reap big rewards against a small risk. Also, another thing scalpers tend to do is pyramid the position. Pyramiding means adding to a winning position if the position moves favourably, of course. So look, some popular strategies, scalping strategies, involve moving averages. As an example, some traders use the 200 period MA, 200 period moving average, and take trades in line with the direction of that moving average. So look, if price trades above the moving average, long positions are generally targeted, while price dipping beneath the moving average would call for short positions. Look, guys, others take it a little further and apply a shorter term crossover strategy. Excuse me, using two shorter period moving averages and enter based on crossovers or a crossover strategy. This is quite a basic method, and there's so much information about MA crossovers online. So please feel free to go and have a look at that. Now, excuse me, this is not a, excuse me guys, this is not a method I've ever tested personally, but I know a scalper who uses a similar system and appears to do, who appears to do well. Scalpers have also been known to combine the RSI indicator, excuse me, and stochastics, though I believe they tend to adjust the settings, to trade lower time frame action. Right now, the downsides of scalping. So some of the downsides to a scalping method and in day trading are, of course, transaction costs. Transaction costs can really affect scalpers. You're going to be making probably at least a dozen trades if you're a true scalper each and every day. And if you're using a broker with high commissions, scalping successfully will be a challenge. Also with shorter term trading, entry has to generally be more refined. Whereas with swing trading and position trading, you have some leeway, right? You have some leeway with your entry, as it does not have to be pit perfect, shall we say. Many traders actually like this with the higher time frames. I'm not sure of how many scalpers, or I know we've got a few here, but if any of you scalpers here would like to send across any downsides that you know of, I'll highlight that to the other attendees. So on to swing trading. This strategy ultimately involves identifying swings within a trend, then attempting to capture these swings. It is worth pointing out that the term trend can be confusing to some newer traders. But look, a trend is not only found on the higher time frames. So when I talk about the higher time frames, as I said earlier in the presentation, I'm not talking about the monthly time frame. Yes, Mike, I totally agree. We have a comment from Mike here saying swing trading is a relaxing way to trade. 100% it is, Mike, yes. It enables you to step away from the screen, have a life, because I'm sure most of us here got into trading to have that kind of life, right? Where you can look at the screen a couple of times a day, maybe a couple of times a day, and walk away and do your own thing. But what happens is you get more engrossed with the charts, and then all of a sudden you become a day trader. Then you're a scalper. So you really need to find out what kind of trading style suits your your personality and your personal commitments. So look, as I was saying, guys, a trend is not only found on the higher time frames. A trend, the market is fractal, which means trends form on the 1 minute time frame, right up to the monthly time frame. But for here, swing trading, I'm actually referring to H1, H4, and daily time frames. Now, look, guys, for those unaware of what a trend is, it's simply a market that's forming higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. And for a downtrend, we're looking at lower lows, lower highs, lower lows, lower highs, and so on. It's pretty simple stuff, and there's so much information. You can go to FP Markets. There's plenty of articles on that if you're interested. So swing traders, ultimately, I think they tend to look for strongly trending markets, excuse me, guys, and trade the retracements and pullbacks. I'm sure some of us here have heard the terms buy the dips and sell the rallies, and this is what I'm referring to. Some of the downsides for swing trading, similar to position trading, are of course exposure to overnight and weekend gaps. Also, as you only focus on capturing the swings, traders can miss out on a lot of profit from trending markets. This is something position trading attempts to capture, of course, because they're looking to stay in the market for a longer period of time. Right, day trading. As the name suggests, this involves taking trades. This involves taking, how can I explain this? This involves taking trades in a single day, right? Usually based on some form of technical analysis. Day traders typically do not keep any positions open overnight, but I know of day traders that do that if the position is in a favorable position and risk has been reduced to at least break even, and some profits ideally taken off the table. Day trade. So look, this goes for scalpers as well. They usually cut off positions before the close of the day. And also, one thing that day traders and scalpers tend to require is accounts with low spreads, right? Low spreads, as this enables more profits and a cleaner entry. Some of the downsides for day trading are, similar to scalping, is that you require relatively good timing and entry, right? Your entry, your stops are going to be pretty small when you're scalping, so your entry needs to be really refined and not pit perfect, because you're going to have some leeway with your stops and things, but it needs to be more refined than it would need to be for position trading and swing trading. And look, guys, I will reiterate what I said earlier in the presentation. Scalping is not for the faint of heart. When I'm talking about scalping, I'm talking about the guys that are in, out, not like one of the attendees, Mike, that said he scalps into trades and then focuses on the longer term targets, which is fantastic, in my opinion. So, look, day trading, much like scalping again, can also be emotionally taxing, right? As Mike again said, swing trading is a less stressful way of trading, and I totally agree with that, because as I said, day trading and scalping can be really emotionally draining. I'm sure most of us here can attest to this, but watching your P&L can really play games with you, right? As short-term trading generally requires the trader to be present at the screen. One alternative, of course, is covering your P&L. But what used to happen to me is when I used to cover my P&L, as I understand the pip value, it's not even subconsciously, I was working out the pip value on the screen, so I knew what the P&L was anyway, and it's on your charts as well, right? Normally there's a line entry. So there's one instance actually I can remember when I was day trading, and it was probably one of the worst times of my trading career. I entered the position and my stop was there, but there was news coming out, and I just did not follow my strategy, and price just jumped. It literally jumped. through my stop. It was just so emotionally draining, and that's when I made the switch to more longer term stuff, and I haven't really looked back. I much prefer knowing where I am on the bigger picture than blindly taking something on the lower time frames. As you know, I always try to compare it to driving a car, right? If you're driving a car and you can't see what's in front of you, you're likely going to have an accident or cause some damage, right? It's the same with technical trading, in my opinion. Just in my opinion, guys, if you're trading the H1 or M15 time frame, you don't know what's going on the H4 or even the daily time frame, you could be trading into a serious support or resistance level, and that could be potentially dangerous for a trade. So look, guys, are there any questions before I switch over to the charts? We have one. Are you purely a technical trader, or do you include fundamental analysis and macroeconomics? Mark, that's a good question. So initially, I was a technical trader, just purely a technical trader. As I said at the beginning of the presentation, I would say I'm borderline insane with charts. There's just something about them that draw me to them. I've still not lost my passion after 11 years now for charts and chart psychology. You know, charting is not just, how can I say this? Charting is not just, you know, flags, pennants. It's not that. There's so much psychology involved in the charts, where the stops will be placed, things like that, where you know the majority of traders. So an example where the majority of traders will place their stops. A good example of this, of course, is the big figures, right? The 120. I think we're the 120 on the euro dollar. We just recently brushed through that. I'll show you that on the charts in a minute. But we know there's going to be a ton of stops taken there. So we know there was a lot of action. There's going to be a lot of action around these areas. The psychology is what really interests me with the charts. So for me, I do focus mainly on the technicals, but I am starting to incorporate fundamental analysis, macroeconomics. So I'm looking to incorporate that. And that's, correct me if I'm wrong, guys, but I think fundamental analysis is for more of the longer term trading. Obviously, you have the macroeconomic calendar, which all traders, even if you're a scalper, should be aware of. These are the scheduled news events for the day, because if you're trading, if you take a position and you're trading just before a large news event is just about to be released, we're going to have some likely have some serious volatility enter the charts. And this is not a position, and this is not really an ideal situation if you're not prepared for it. So for me, I would always look at the macroeconomic calendar, even if you're a short-term trader. But yeah, as I understand it, fundamental analysis is for more of the longer-term trader. And also, you can look at intermarket analysis. You know, what are bonds doing? What are yields doing? What's gold doing? What's the dollar index doing? We're going to touch on the dollar index, actually, I think, in a minute. What kind of trader are you? I hope I've answered that question, Sherwin. With what I just said. Roland, can you still not hear me? Roland's saying they can't hear me. Guys, can you all hear me? Yeah, just to confirm. It might be Roland. It might be a problem on your side, friend. Sorry about that. Okay, all right. So look, guys, as this is a presentation focused on, let me just switch the slide over. As this is a presentation focused on the higher time frames, I will, if it's okay with you guys, I will now show how I view higher time frame movement in terms of price action. This largely consists of, you know, support and resistance, supply and demand, and trendline studies. Be aware though that, you know, for high time frame studies, this is not, you don't really only have to focus on the price action side of things. Traders can use indicator overbought and oversold signals, for example. And these are really worth watching on the higher time frames. Also, many traders, as I said, incorporate the US dollar index in their trading. So for those of you who do not know what the US dollar index is, it simply compares the value of the US dollar against six currencies. And I'm going to try and remember these: the euro, the Japanese yen, the pound sterling, Canadian dollar, Swedish krona, and Swiss franc. However, guys, it's important to realize that the euro accounts for, I believe, I think it's around 58% of the weighted value, which means it has a large impact on the dollar index and the dollar index on the euro dollar. I think the actual term is 57.6% for the euro. Also, just to be clear, most position traders may sidestep lower timeframes and focus solely on the bigger picture to analyze and take trades, which is absolutely fine. Each to their own, right? With trading, as we're all different. So look, here I will show the monthly and daily time frame action to gauge the bigger picture movement, and then switch over to the lower time frames to view shorter term flow, which may deliver a more defined entry in line with higher time frame direction. When I say direction, I'm not necessarily talking about the trend, but I do take into consideration the trend. I'm talking about structure as well, technical structure. As I said, support and resistance, supply and demand, and trend line studies are the main components. And also, I'm not sure if you guys have heard, but I also focus on, heard of this, but I also focus on the Quasimodo support and resistance. Do any of you guys know what the Quasimodo support and resistance is? Or have heard of it? This is what, yeah. What do you think of it, Mike? I think it's, personally, I think it's one of the better ways to really look at support and resistance. You can really draw in some fantastic reactions. I'll touch on this again. I'll touch on this on the charts in just a minute anyway. So look, are there any questions about anything I've spoken about so far? Please, look guys, please feel free to question anything you've seen or I've said. You know, I'm not Harry Potter. We're all students of the market and we're here to learn together, right? So any questions, please just fire them across now and I'll happily try and answer any queries. Meanwhile, I'll switch things over to the charts and then we'll look at some chart work. Okay, guys, I don't see any questions, so I assume everything I've said is understood. Okay, all right, guys, can you just let me know my charts are coming across clear? I have a question here. Do you trade Fibonacci? Yes. Sorry, I should have highlighted this. Fibonacci is something I also trade as well. Would you like me to go over some of that? I can. It's no problem. We have some time. Guys, just quickly, just ping across a yep or a no. Can you see my charts? Yeah, cool. Excellent. Thanks, guys. Let me just. Yeah, cool. Excellent. All right. Right, so let me just, okay, so here we have the euro dollar. I'm just going to ping up my analysis for yesterday. So look, guys, on the monthly time frame, this is the monthly time frame here. This is a real, as I said, much, you know, it's an incredibly long-term time frame. I use this to gauge, you know, potential longer-term moves. And also the daily time frame to help, you know, complement this chart. This is my longer term view, and this is my shorter term view with the H1 and H4 time frames. Right, so look, as you can see on the euro dollar, following a 3-month, I think it's a 3-month retracement. Yep, 3-month retracement. Demand at 1857, 1352 made an entrance in recent trading and sparked, you know, a revival in euro dollar action. This is quite a considerable move, nearly 3% in the month of April so far, month to date, which puts the buyers firmly at the wheel for now, for me anyway, at this point. But also based on trend studies, the primary uptrend. I'm not sure if you guys are familiar with the primary uptrend. This is Dow theory. So we get a primary uptrend, we have the secondary uptrend, and I think he calls it the minor trend. I can't remember the term he used, but the minor trend, which is the more intraday trend. So we have a trend break here of this high here, which I think is the 1714 high on August 15, and we broke this in July of 2017. Brilliant. We have a trend possibly forming an uptrend, and with this rally up and with this reaction here, I do believe, technically speaking, and this is only my opinion, guys, I believe the euro could head higher in the longer term and potentially, refresh, 2021 peaks, at least 2021 peaks, and test the ascending resistance here, taken from, I believe this is the 1641 low. That's all I have on the monthly time frame. Also, do note we have a trend line resistance breach here. This is a clean break, and this, as most of you probably know, a trend line break is suggests that buyers are in the driving seat for now, and a trend reversal could be on the horizon. So as we kick off that switch over to the daily time frame. So look, the euro went on a run yesterday as the US dollar index, which is here. I hope you guys can see this chart. I've just switched over. As the US dollar index, remember the US dollar index and the euro are inversely correlated, right? So I always used the dollar index as a way of correlation, as a way of determining some correlation. So you'll note on the euro daily time frame, we actually broke above this is the 200-day simple moving average, by the way. We broke back above this, which for newer traders here, this is generally considered a bullish signal when price crosses above a moving average, which we had here. And notably, we retested this level as dynamic support. So knowing this, and knowing that the Dixie, that's the ticker symbol for the dollar index, also broke and retested the underside of the 200-day SMA, we know we're likely heading higher on the euro, which did indeed occur. Now we are testing some form of, I would say this is minor resistance. This is nothing to get to really write home about. We are testing some resistance around the 2058 region. But look, right now, as of 9:45 in the UK, we are attempting to break this resistance, which unmasks Quasimodo resistance here, 2169. Now, Quasimodo resistance for me, put simply, is simply a fake out scenario. So we had a high here. I'm not sure if you guys can see this. We had a high here, a minor retracement, followed through by a subsequent higher high, and then a dip lower. So this faked out any orders that were around this region here. And generally, you can view a reaction from these levels. So look, we're breaking this resistance. This is certainly not a level that should be overlooked just yet, because we're only marginally crossing above the level. But this is something I would definitely be watching going forward. And we also have another Quasimodo resistance just above that at 2278. Now, also for guys who follow the indicators, some of the indicators, I really do like the RSI. We also had, interestingly, as we broke the moving average, the 200-day moving average, and we tested it, we also broke an RSI trend line resistance from here to here, and a break. We also formed a bullish failure swing, which is generally a bullish signal. And now, as you can see, we are approaching overbought space. So, okay, so for here, look, we have resistance on the daily time frame at 2058, potentially showing some weakness, and couple this with the monthly time frame rebounding from demand at 1857, 1352. For me, with the trend on the monthly time frame and the trend on the euro dollar, and the euro dollar being higher since, I think it was COVID induced March lows. March lows. We've been trending higher since March of 2020. So for me, this is quite a bullish market, technically speaking, for now. On the longer term, we have a question here from what is your RSI setting? Just the default setting. I've not changed any settings on this. So it's based on the 14 period RSI. Nothing changed or adjusted. This is the basic RSI setting. Okay, so look, we move over to the shorter term flow, and I think this is similar to what some of the attendees do. I would believe they gauge the longer term flow, and then move down to the lower time frames to see how we stand, right? Because you can get cues, technical cues from the lower time frames that we are going to move above. So for instance, this daily resistance, we're looking at this 2058 as potentially vulnerable, right? But on the H4, we are testing an area of supply at 2101, 2059. So far, we've not had much of a bearish reaction. And, so we could be looking at a potential follow-through move above this area. We'll have to wait and see, of course. But any reaction from this zone could retest support at 1990. I really like this area of support and resistance. You see how clean it was, how clean it is. We have a nice low here, a nice rebound, followed through by two reactions as resistance here. So very, very clean, and here as well, a very, very clean support and resistance level. And also, just to highlight, guys, Quasimodo resistances, support and resistances, like traditional support and resistance levels, can serve as support and resistance when breached. Now here, for example, we have a Quasimodo resistance level, right? And it completely brushed. It was annihilated, right? But we had a cue, right? We knew that this might happen because we're coming from monthly demand, and we've broken the 200-day SMA on the daily time frame. So we knew that could potentially happen. Now, what happened was we just missed it. We just missed it. We actually formed. Let me zoom in, guys. We formed a hammer candle pattern. This is a bullish candlestick configuration, just ahead of that Quasimodo resistance turn support, and before rallying above this area of resistance here. So that's where we are on the H4 time frame. We're at supply, but we're not showing much of a bearish reaction just yet. And as I said, any dip from this area would likely attack the 1990 support. So look, on the H1 time frame, we are testing 2070 Quasimodo resistance. I'll just show you guys this, how I've marked this one up. Quasimodo resistance, I took the high here. Also, there is a Quasimodo resistance here, guys, if you can see it with this high here, which may be tested as well. I haven't marked that on the chart just yet. What I liked about this Quasimodo resistance, though, was that we joined with a I believe this, let me just see. Let's get the notes up, guys. I believe this is a 1.618% expansion level at 2068 and a, just see, a 100% projection at 20.0. Come on, my eyesight's really bad. 20.066. So this is what's called, a moderate fib cluster. I'm not sure if any of you guys know much about fibs or any newer traders here, but Fibonacci, when Fibonacci levels converge at in a really tight area of a really tight price area, they're generally labeled fib clusters. It's a cluster of Fibonacci levels. That's all really. And this is what we have here, but just with two. It's best to see 3 or 4 or even more if possible. Yes, so look, we're testing 2070 Quasimodo resistance, and as you can see, if I zoom in, we've had a minor bearish reaction, but we've followed through, right, with a strong, healthy upside candle. Now, something really important here that I haven't marked up because it wasn't formed yesterday. Let me just zoom into this chart, actually, is this area here. Now, these are the type of areas I look for all the time in the analysis, all the time, because of what? They are decision points. These are demand areas, but they are also decision points. You know, I find a lot of traders, they throw across truckloads of demand areas, right? A demand area here, there. It has to make sense on the chart. Now, we are in an uptrend, right? We know we're in an uptrend. We know that from the higher time frames, and we know that just by looking at the H1 chart, clear uptrend, right? And we look for decision points. These demands are decision points. They're not simply, I'm trying to find the best way of explaining this, but a demand is a decision point to break something considerable. Now, we haven't actually broken anything considerable on this chart. We did break this high here, but this is very, very minor. But what is interesting is this area contained a decision point to push higher and attack the 2070 Quasimodo resistance and the Fib cluster. Now, given the strong push above this area, there's a chance this small little decision point area here could hold active buy orders. Could, I repeat, could. So this is something you can look for in your charts, is active decision points. Think of them as decision points, not supply and demand so much. And look for the areas that have strong upside momentum for demands and strong downside momentum for supply areas. I think I've gone a bit overboard with the technical analysis here. I apologize, guys, if I've confused anyone here. So look, where I feel we are going on the euro, given the chart structure that we can see here, I do believe, this is only my personal opinion, guys, so please do take it as such. This is not investment advice. The euro does look very strong at the moment, longer term, which could, you know, any resistance levels on the lower time frames could have problems. That's not to say a reaction won't be seen, but a reaction that, you know, is anything to write, you know, a reaction might be limited. That's what I'm trying to say. Okay, any questions on the euro dollar chart, guys? Okay, Mike's saying that's exactly the weekly pivot point R2. Okay, what's on the okay, is that on the monthly time frame, Mike? The weekly, I don't actually look at weekly pivot points or pivot points at all, but I know of traders that do, and they swear by them. Are we talking about, is it here on the within this monthly demand? Okay, I'll wait for Mike to respond, and I'll just I'll switch over. Look, guys, where you would look for. Okay, we have a question from Anthony. Where you would look for order entry point? Right now, for me personally, there's not much of an entry on the euro. I do, as I said, I do like this small decision area here, given we have broken above the Quasimodo resistance now and placed pressure on any sellers there. This emphasizes strength for me. But do remember, we are in H4 supply, right? But this H4 supply for me is particularly vulnerable, given we are coming from the monthly demand, and the trend structure just really points to a higher, higher levels. So that we've got trend structure in favor, and we have technical structure mostly in favor. Daily resistance, excuse me, is under pressure at the moment. That could change given we have H4 supply, of course. But yeah, look, I have to see how this plays out, but I would be looking around here for a short-term entry. But look, guys, this is only my opinion, and you know, this is not investment advice. These are the decision points I would be looking at for sure. But I can't actually give you a direct entry there, Anthony. So yeah, any other questions on the charts? Anything you don't understand, or I've said something you don't agree with? Please do highlight this as just looking for your. Okay, cool. Look, guys, I'm going to stay on a little bit longer because obviously we started. There was confusion with the time. I'll go over a couple more charts, and yeah, and we'll work from there. If that's all good with you guys. So look, I'm going to switch over to the Aussie dollar at the moment. Anything interesting going on here? Let me just check the charts just real quick The dollar yen was interesting. I found that really interesting market at the moment. Let me just corner this. Oh, we had a lovely reaction. This is a beautiful reaction from a demand fib cluster. I'll go over this in a minute, guys. Right, so look, we're on the dollar yen. Can you show how you got your Fibonacci cluster? Okay, we have a question here. Can you show how you got your Fibonacci cluster? Look, if it's okay, can I show this on this chart, because this is a much better example of Fibonacci clusters, and this should help you fully understand the process. Right, so look, on the dollar yen, we had a breach of a descending resistance here in March, and that was nearly a 4% move. But we have seen some retracement. This is alongside the dollar index, and I believe US Treasury yields as well have dipped. So look, April is really on the ropes, you could say, and we look like we may dip back into this area. But look, I was looking for descending resistance turned possible support, right? I was looking for a retest of this level, potentially to continue higher. Now, knowing this, after we broke these lows, I thought, okay, look, this area is probably not as secure as I thought it was. Now, as I said, we've seen April really decline. I think it's nearly 2% at the moment. But now we're heading into a really interesting area of demand. So demand at 107.58, 106.85. That converges with trendline support. Now, this is a traditional trendline support where we have at least 2 points connected, and this is taken from, I believe, around the 102.52 region, extended higher into the future. So we have trendline confluence, demand confluence, and also a 38.2% Fibonacci retracement level at 107.73. Now, given this, I think I said in my previous analysis yesterday, let me just double check. So, yeah, I'm just going to read this out. Voyaging into the aforesaid areas, which I meant these areas here, unlocks the possibility of a bullish revival. This is technically speaking as well, because we know we've broken a descending resistance on the monthly time frame, and we know we're approaching a heavy. This is a supply turned demand, by the way. This is a demand area, previous supply, now possible demand. Okay, and okay, onto the H4. So someone asked about the Fibonacci cluster, which is cool. So look, we've broken through this. Let me just get rid of that. It confuses people. So look, we have a nice, really tight area of Fibonacci studies here at demand. Now, this is a really nice demand. I'm not sure if we broke anything significant to the left. Let me just check this out. Yes, we did. Right. So this is a perfect example of how I look for demand areas, right? So we have the demand area formed here. Now, when I look for demand areas, I really like the rally base rally areas. Rally base rally. So a rally, small base, small consolidation, followed through by a subsequent rally, right? But I don't just look for these. I don't just look solely at this requirement. I also look what it's broken. What did it achieve? What did the area do to previous price action? What strength was behind the move? And look, we broke this followed through. So the move from this demand here broke through a considerable, a notable high here. And that is enough for me to say, okay, this is an area worthy of attention. This is a demand area worthy of note, because we've broken something that's considerable to the left. And also this formed around, if you look, the round number 108. So we've not only broken through the offers at resistance. Excuse me, guys, I just need some water. My throat is completely dry. Sorry, guys. Just give me a second. So as I said, we formed a demand that's broken, not only the round number, 108. So that takes a lot of effort, right, to push through any offers that are at the 108. An offer is sellers basically. So to push through the 108 level. We've also broken, as I said, the notable high to the right here. This is a clean area for me, and I did highlight this in my analysis, I believe, on the H4, which, as I said, which benefits from a fib cluster around the 108-ish level. So look, fib clusters. As I said, a fib cluster, as its name implies, is a cluster of Fibonacci levels. It's nothing fancy, nothing really too complicated with it, but you can form a Fibonacci cluster with retracement levels, extension levels, projection levels, and expansion levels. Okay, as long as they converge in a tight area, you have a possible area of support and resistance. Now, I'll show you how I got this Fibonacci cluster here. I'll zoom in so it's nice and easy to see. The 1618, I believe this is an expansion level. 1.618% expansion, which is drawn from here to there and then pulled back to the high. I also had, I only have two there. I only have two areas, I think. Yeah, I only have two Fibonacci levels. I thought I had more. So we also have the 100% Fibonacci projection at 107.95. Now, guys, for the 100% Fibonacci projection, any traders here that follow harmonics will know that this is also an AB equals CD pattern. So this is the A, B, C, and then we extend the distance from the C level to the D level. So the distance here to here extended from C to D. I hope I've explained that clearly and I've not confused anyone. So A, B, C, D. So this literally, this is a basic harmonic structure that I do also look at as well. And as you can see, this was a near, to the pip connection with the 100% Fibonacci projection. Does that answer your question? We had a question on the Fibonacci cluster. It's simply, guys, don't overcomplicate this. A Fibonacci cluster, there are some good books on this. I can't remember for the life of me. I've read so many books now, I can't remember which book I read that explained this very well. But a Fibonacci cluster is simply a cluster of Fibonacci levels. Now, look, guys, I see some new attendees just joined. There was some confusion with the time. Please see the chat box. And I will stay online a little bit longer to go over any charts or any questions you may have. Apologies for this, guys. We have a question. Do you ignore the weekly chart in your analysis? No, I definitely do not ignore the weekly chart in my analysis. If I just go back to the charts. Oh, sorry. Yes, I do. Excuse me. Yeah, I do, Anthony. Yeah. For me, the monthly time frame and the daily time frame is all I need. Many traders do look at the weekly time frame, of course, and I could look at the weekly time frame if I wanted to, but I find that the monthly time frame and the daily time frame is, it's enough for me to gauge where we are on the bigger picture, where we're coming from, where we're potentially going to, and things like this. That's enough for me. Again, it's something you need to look at in your own personal trading strategy, how you want to approach this. But for me, as I said, the monthly time frame and the daily time frame is enough. We have a question. What does that mean, the Fibo cluster? Sherwin, I just explained that. Did you the Fibonacci cluster on the H4? Do you want me to go over that again just real quick? So look, a Fibonacci cluster, as I said, is a cluster of Fibonacci levels. Yeah, it's literally a cluster of Fibonacci levels at a price point on the chart. That's all it is. And these are made up of retracements, extensions, projections, and expansions. Okay, there's nothing really more to it. But if you can find a nice area of Fibonacci confluence or cluster around an area of demand, and as I already went over, I'll just quickly go over it for newer for guys that just come in. We have the demand area here, which broke not only the round number to the right here, we also broke the notable high here. So we knew that that was a serious contender for a demand area. Okay, and it was fresh as well. We had no touch as we left the area. We didn't come back, right? So this was a fresh zone, a really cool area to be watchful of, and especially as we converged with a fib cluster here. This was a very, dare I say it, high probability area for a reversal. I did note this in my Tuesday analysis yesterday evening to be wary of. So yeah, we have a question. What time did this start? Not 7 p.m. AEST. No, I'm sorry, Julian. I believe if you check the chat box, there was a mistake with the timing. Apparently, I'm not sure of the details, but I will stay on a little bit longer. We did start an hour and 10 minutes ago, so I do apologise for that. There was a confusion with the timing. I think it's to do with the BST and GMT time, as I'm stationed in the UK. Sorry about that. But yeah, there will be a recording, Jim. Yeah, there will be a recording. As I said at the beginning of the presentation, there's a recording it's available on the FP website and also on YouTube as well. And also, I believe the support team will send out an email regarding the recording. So please do go ahead and watch that. And as I said, guys, look, I know there's been some confusion with the timing today. Any questions that you see on the recording that you don't agree with or you want to question, please do send me any questions to marketanalyst@fpmarkets.com, and I'll get back to you as soon as I possibly can. So look, guys, I'll go over a couple more charts. I'm not sure if any of the newer guys saw the dollar-yen analysis, but if you want me to go over that again, this was a really nice setup that occurred. I'm more than happy to do that. Okay, we have a question here. How do you establish the directional bias? Look, guys, I'll go over this again. I think the euro dollar would be a good one for anyone that's just joined. So directional bias for me, I would always look at the monthly and daily time frames and see where we're coming from and where we're potentially going to on the higher time frames. And then I would look down to the H4 and H1 time frames to potentially secure an entry. So let me just switch over to the dollar yen actually, because that was a really good one, I thought. So we knew, actually, sorry, excuse me, guys, I'll switch back to the euro. Euro is probably the better example. So we know we're coming from a monthly demand area. I'm going to go through this pretty quick, as I've already gone over this, but we are coming from a monthly demand area on the monthly time frame, and we formed a trend, right? And we broke the high. We're in a trend. We're in the possible beginnings of a trend, and we broke trend line resistance. So for me, excuse me, guys. So for me, we are going to we are potentially bullish on the euro longer term, and also we have on the euro dollar we have resistance at 20.58 in a particularly vulnerable position. As I said at the beginning of this. When I first looked at the chart, we have also crossed back above the 200-day simple moving average, and also we crossed below the 200-day simple moving average on the dollar index chart, which is inversely correlated to the euro dollar because of the weighting the euro has within the dollar index, which is around 58%. Okay, so we know we're particularly vulnerable resistance at 20.58 on the daily time frame. We know that we're also in supply on the H4 scale. Now, knowing that we have monthly price coming from the monthly area, I would say that the H4 supply is unlikely to deliver much of a bearish reaction. However, this all depends on how traders view this resistance, of course. And also there was okay. Are there any questions? Any more questions? Has that answered your question regarding the directional bias? So look, I look at the monthly time frame and daily time frame. to gauge higher time frame direction, and then look for the H4 and H1 time frames to zoom in on areas of interest. Which time frame to trade? Yeah, that's a good question, Jim. Which time frame to trade? It's a shame because I went over on the slides just a minute ago. I cannot tell you which time frame to trade, Jim. It's impossible. We're all different. We all have different commitments, right? So there's 4 types of trading styles, right? We have the position trader, we have the swing trader, we have the day trader, and we have the scalper. Jim, do you have a full-time job? If you have a full-time job, it's unlikely you're going to be able to do the scalp or day trade. Some people do still though, but it's probably unlikely that you're going to be scalping or day trading. You're probably more better fit to swing trading. Swing trading is the H1, H4 daily time frames, and position trading is the more longer term investment approach, which personally for me is the daily time frame and weekly time frame, monthly time frames as well. Okay, we had another question here. What time frame to determine the primary trend for a day trade? That's a really good question. What time frame to determine primary trend for a day trader? Okay, for a day trader. Now let's assume that for me personally, a day trader will be looking at, I think it's the M15 time frames, the H1. So I would be looking at the H1 time frame to determine the primary trend. Of course, you can switch over to the H4 if you want, but I would be looking at the H1 time frame to determine the primary trend, which is higher highs, higher lows, higher highs, higher lows. You can see on the euro we're in a clear uptrend at the moment. So you should really be cautious of taking short-term day trades at resistance, in my opinion. Yeah, so I mean you can already see here the Quasimodo resistance at 2070 is under pressure. A very modest reaction, and as already explained here, we have a decision point demand around this zone here as well. I hope that answers your question regarding the primary trend for a day trader. We don't seem to have any more questions on this. So guys, I apologize once more about the time confusion. Yeah, so if there's any more questions, please do fire them across, and I'll try and have a look at them and see what I can do. If not, I'll spin things back to the slides and wrap things up. Yeah, I don't see any more questions coming through. Okay, I'm going to spin things back. Okay. Okay, so look, Q&A, doesn't seem to be any more questions. Once again, guys, look, I'm really sorry about the time confusion here. I'm not quite sure what happened. I think it is the BST and GMT switch. Okay, look, so I think I'm going to wrap things up here. My throat is on fire, literally on fire now. So look, I sincerely hope newer traders did gain something from this presentation, and we're able to walk away more knowledgeable. As always, look, if there are any specific topics you would like the team here to talk about, my colleagues or me, please be sure to send in your suggestions to either support@fpmarkets.com or marketanalyst@fpmarkets.com. Also, feel free to register for the FP Markets Telegram channel to get instant updates. The sign up tab, I believe, it can be found on the left-hand side of the FP Markets website. Look, guys, on that note, which time frame? No. Okay, I do have issues. Okay, so look, we have one more question. I do have issues with drawing Fibonacci extension. Okay, so look, a Fibonacci extension. How would I? So an extension. Let me just spin things back to the charts just real quick. Right. Okay. So Fibonacci extension. Let me just find a chart where I can try to find a chart, a clean chart. Ah, there was one here. This was a really good example. So a Fibonacci extension. So think of a Fibonacci extension as an extension of the retracement tool, if that makes sense. So we have the retracement tool, right? This is very basic. This is the very basics of Fibonacci. I'll just click on all the Fibonacci levels. I'll leave the 236 out for now. So this is your basic Fibonacci retracement tool, right? So we look for price to move up and then retrace and then potentially react at any one of these levels. 50% is not a Fibonacci level, by the way. I'm just want to highlight that. Okay, so look, we use these levels to, but however, the 50% does tend to react very nicely. So yeah, this is a Fibonacci retracement, and we're looking for. So imagine we have price coming up here. And price reacts at one of these retracements. Fantastic. We have a retracement level that's held price. Brilliant, right? What happens if price continues to decline? Now we're looking at an extension of the Fibonacci retracement. So look, we can go into the 127. I think 1618. These are the only levels I look at. Is the one spots. 127 and 1618. So this is an extension. Just think of it like this: it's an extension to your Fibonacci retracement. That's it, nothing more. So here, so taking this knowledge here. So look, we've made a. Just imagine we're in an uptrend. Let me just make this a little bit clearer for you so you can see it. So we're in an uptrend, right? And we've formed an uptrend. I mean, the 3 points. Okay, look, so we're in an uptrend, right? And we've come down and we've broke this low. So the retracement levels are negated at this point. So now we're coming down to the Fibonacci extension, 127.2 and the 1618. That's simply all it is. So for as a live chart example, we could use these 2 points here, you see, and we reacted off the 127.2% Fib extension. Okay, 3 points. I'm not sure what you mean by 3 points. I'm not too sure what you mean by 3 points. I'll have to explain that. Okay. I'm going to have to A, B, and C. No. So look, a lot of traders, including me actually, do look at Fibonacci extensions. It's quite confusing, I know. Some traders look at Fibonacci extensions this way, which is fine. You know, look, it's just. I'm looking at the textbook example here for you. This is a Fibonacci extension, as what many traders, I believe is a extension point. Okay, so you have A, B, and C, right? But the Fibonacci extension is simply. Textbook is simply an extension of the retracement, okay? But as I said, many traders do look at the extension from A, B to C as well. But the textbook style is from, and you can check. I do have a book. I do have a few books actually on Fibonacci. I did have them around here somewhere. Fibonacci Kane Trading is a very good example, and this shows the Fibonacci extensions. And Caroline, oh, I forget her name. Bordlin or something. I can't remember her surname, but she's wrote a really good book on Fibonacci trading, and it highlights the Fib clusters there as well, and it also goes into detail about the extensions. So look, extensions is simply an extension of the retracement tool. That's all you need to know really. And the please give the name of the book. Yeah, I'll have to. What I'll do. Look, can you? If you can ping across your email somehow to the market analyst at fpmarkets.com. I can't pronounce your name. I apologise. But if you can send your email to marketanalyst at fpmarkets.com, I will send you the links of the books for this Fibonacci, for textbook Fibonacci drawings, as they're a really good read, and they will open your eyes to for the amounts of fib levels that you can trade. Okay, yeah, please do make sure to send that email, or you can send it to me here, I believe. Just make sure the message is directed to me, and I'll be sure to send them across to you later on today. Whoa! So guys, as I said, my throat is on fire now. I hope this has been a educational. I hope it's helped some newer traders. And once again, I do apologise for the time confusion. Yeah. So look, on that note, thank you all so much for taking the time out of your day to attend the presentation. As I said, I really hope you have taken something away from it. Excellent. Thank you. I'll just get that email right now. Just copy and paste that. One second. Just let me write that on my down. I can't seem to paste it. Just give me a second. Okay, I wrote the email down. Excellent. I'll ping that across to you shortly. Okay, with the books and the links. Okay, guys. Yeah, I'm gonna close up now. Thank you all. As I said, thank you all for taking the time out of your day to be with us. Any questions? Please fire them over to a market analyst at fpmarkets.com. Thank you, guys. Have a great day. See you.